Hello and welcome to the deep dive from Westferry Times. Today we're looking at some really interesting signs that maybe, just maybe, the UK economy is gathering a bit of strength. We've pulled together insights from quite a range of places, news outlets like the Irish Sun, official reports from the House of Commons Library, even some online discussion threads and, background info from Wikipedia. All that sets the stage for our expert guest today. Our aim: to really understand the main things driving this potential upturn without getting lost in too much jargon. Just a clear picture of what's happening. And helping us make sense of it all, we're really pleased to have Dr. James Bennett with us. He's a senior economist at the London School of Economics. A very warm welcome.
Thank you. It's great to be here.
Great to have you. Okay, so let's start with the big picture, shall we? There was that headline about the IMF upgrading the UK's growth forecast for 2025 up to 1.6% now, which is, well, it's better than they thought before.
Yes, that's right.
What's driving that change in outlook? What are the main reasons they're feeling a bit more positive?
Well, it seems to be a few things coming together, actually. One key aspect is this continued pickup in real incomes. So basically, wages are starting to properly outpace inflation again.
Ah, okay. So people actually have a bit more spending power.
Exactly. And that naturally feeds into consumption, people buying more things. Then there's the Bank of England. They've started trimming interest rates. And the general expectation is that more cuts will follow.
Right. Cheaper borrowing helps.
It does. For people, for businesses, it could definitely encourage more activity. And finally, you've got some government policy kicking in. Measures from the autumn budget aimed at boosting public investments are expected to start feeding through.
Okay, so it's kind of a three-pronged thing. People earning more in real terms, potentially lower borrowing costs, and a bit of a push from government spending. Sounds promising, at least initially. Let's maybe dig into the jobs and pay situation a bit more. That feels pretty fundamental to this whole story.
Absolutely. It's crucial. If you look at the employment figures, they are looking encouraging. The data we have covering the 3 months to January 2025 shows the employment rate ticked up slightly. It went from 74.7% the year before to 75.0%.
Okay, a small rise,
Yeah.
but moving in the right direction.
Precisely. And perhaps more significantly, look at wage growth. Average wages, excluding bonuses, were up 5.9% compared to the previous year.
Which sounds good, but inflation has been the big story, hasn't it?
It has. But the crucial part here is that after you account for inflation, wages were still up by 3.2%.
Ah, okay, so that's the real terms increase you mentioned earlier. People are actually better off, on average.
Yes. The purchasing power is genuinely improving, which underpins that consumption point we talked about.
That definitely feels like a solid positive. People in work, wages stretching further. But are there risks? Things that could knock this off course?
Oh, absolutely. There are always potential headwinds. While the domestic picture looks, let's say, brighter, we can't operate in a vacuum. Things like ongoing geopolitical issues, conflicts or instability or any new frictions in international trade, those could definitely pose a risk.
Right, external shocks.
Exactly. They're often hard to predict and can quickly change the mood or the reality. So caution is still needed.
Okay, a good dose of realism there. Now, something else that jumped out when we were looking through the background was this idea of business confidence. It seems to have taken quite a leap. Why does that matter so much?
Business confidence is, well, it's a really important forward-looking indicator. Think about it. If businesses feel optimistic about the economic climate, what do?
They invest, hire people.
Precisely. They're more likely to spend money on new equipment, expand their premises, maybe take on more staff because they anticipate more demand down the road. All that drives growth.
And the numbers were quite striking, weren't they?
They really were. The Lloyd's Business Barometer for February showed a big jump 12 points up, taking the overall confidence level to 49%.
Yeah.
That's the highest it had been since August 2024.
Wow. Okay.
But even more notable, perhaps, was the specific measure of economic optimism. That surged 18 points.
18 points in 1 month.
Yes. Apparently the biggest single monthly increase since late 2020. So quite significant.
What do you think is behind that kind of jump? Is it just the interest rate outlook settling down, or perhaps businesses liking some of the policies we mentioned?
It's likely a mix of things. A clearer path for interest rates certainly helps businesses plan. Less uncertainty is usually welcomed. And yes, some of the specific measures in that autumn statement, which maybe we can get into, could definitely be playing a part in boosting that optimism, especially in certain sectors.
So if businesses are feeling that much better, what are the sort of, real world effects we might expect to see soon?
Well, the hope is that this translates into tangible action. Increased capital spending is the big one.
Buying more stuff, basically. Machines, tech.
Yes, investing in the future capacity of the business. And also more active hiring. If you expect to be busier, you need the people. Both of those investment and hiring are really the engines of sustained economic growth.
Okay, that makes sense. Let's talk about those policy levers then. The government's role. You mentioned the autumn statement. It had, what, something like 110 measures aimed at growth.
That's the number cited, yes. A whole package designed to stimulate activity and investment.
Can you give us a couple of the main examples, the ones people might have noticed?
Sure. Two big ones were, firstly, a 2% cut in national insurance contributions for employees.
Right, so more money in people's pay packets.
Directly increases take-home pay for millions, yes. And secondly, for businesses, making the full expensing policy permanent.
Full expensing. Remind us what that is again.
Essentially, it lets companies subtract the entire cost of certain investments, like new machinery or IT equipment, from their taxable profits in the year they make the purchase.
Ah, okay. So rather than spreading that tax relief over several years, they get it all up front.
Exactly. It significantly reduces the immediate tax bill associated with making those investments. It's a powerful incentive to invest now rather than later.
So tax cuts for individuals and a big incentive for businesses to invest. How did those moves go down? What was the general reaction?
Generally positive, I'd say. Businesses, understandably, welcomed the certainty and incentive provided by permanent full expensing, and most economists saw these measures as, broadly supportive for economic activity in the medium term, steps in the right direction.
Right. But it's not all just about what happens domestically, is it? The UK's place in the world trade relationships. That must play a part too.
A huge part, absolutely. You can't separate the domestic economy from its global connections.
So what's happening on that front? Any recent developments influencing things?
Well, one significant development is the New Deal that was finalized with the European Union.
Yes, the Windsor Framework follow-up.
This sort of area, yes. Looking at the practicalities, key elements included making border checks on things like food products smoother. Less friction means easier trade.
Which should help businesses trading with the EU.
It should. And there were other aspects, too, like establishing a defense and security partnership. But focusing purely on the economics, the estimates suggest this new arrangement could add around $9 billion to the UK economy.
$9 billion. That's quite a substantial figure.
It is. And alongside that boost to GDP, it's also expected to help reduce consumer prices slightly, presumably through those easier trade flows and lower costs for importers.
Okay, so potentially another factor helping with inflation and growth. More efficient trade, lower costs.
Precisely. It underlines the broader point. Smoother international relations and sensible trade deals really can provide a tangible economic lift.
So bringing all these different threads together then, employment, wages, confidence, policy, international deals. What's your overall take? If these positive signs hold, what does the near future look like for the UK economy?
Well, putting it all together and assuming these trends do broadly continue, a period of steady growth seems quite possible. Perhaps not dramatic, but solid positive growth. It hinges on real wages continuing to rise, businesses acting on that renewed confidence, and getting the benefits from those policy changes and the improved EU relationship.
But with those caveats we mentioned earlier.
Absolutely. The caveat is always there. We need to keep a close eye on the global picture. Any new shocks or slowdowns elsewhere could impact the UK. And of course, any major shifts in domestic policy could also change the trajectory. So, cautious optimism might be the phrase, but vigilance is key.
Cautious optimism with vigilance. That sounds like a very sensible economic perspective. This has been incredibly helpful in piecing everything together. Thank you so much for sharing your time and expertise with us today.
It was my pleasure. Happy to discuss it.
And thank you for joining us here on the Deep Dive from Westferry Times. As we've heard, there are quite a few moving parts potentially shaping the UK's economic path right now. Maybe as you go about your week, you could think about how these wider economic currents, things like inflation, job prospects, interest rates, might ripple through to your own situation, your plans, your choices. It's certainly worth keeping an eye on how these trends develop. Until the next Deep Dive, thanks for listening and goodbye for now.